Is my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
The future of capital markets runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
Today on the Blockchain Report, Bitcoin's holding around 111K, and it's probably because the U.S. Commerce Department says it's putting GDP on the blockchain, because apparently rigged data looks more trustworthy once you slap it on chain. Analysts claim Bitcoin can eat gold's lunch by 2030, which means $1 million Bitcoin and a lot of sad boomers polishing bullion. And over in Japan, Metaplanet is raising nearly $1 billion, turning shareholder dilution into the world's most expensive DCA strategy. All that and more right now, let's go. Good morning, my Bitcoin believers, and welcome back to another episode of the Blockchain Report. I'm Hank Hudson, coming to you live from San Francisco. And before we dive into today's parade of pumps, dumps, and delusional price targets, let's play a round of Spot the Bag Holder. Here's how it works. You tell everyone you're a long-term investor, but secretly you're staring at the chart like it's a pregnancy test. And while you're at it, smash that like button the way Michael Saylor smashes the buy Bitcoin button relentlessly and with absolutely zero chill. And don't forget to follow us over at RoxomTV and yours truly at Hank at RoxomTV, because even Bitcoin needs a hype man. You know what I mean? Boy! He does. All right, let's separate the whales from the minnows, the hodlers from the hopeless, and figure out who's riding the rocket and who's stuck holding the meme coin bag in this morning's market rundown. Let's go. Okay, it is Wednesday. The markets are moving and shaking. Let's see if anybody's candlestick making some green ones for us today, and not really. Pretty boring across the market today, but hey, sometimes boring is good. You remember those days with the huge 30 to 70% drops in Bitcoin? We were longing for these boring days like this. So let's take a look and recap this morning's movements. Right now, Bitcoin hovering right below the 112K mark. We saw us go as low as 108.09, but it looks like that 110.5 support level that our main man, Big Beat himself, Stephen Orr, talked to us about earlier this week seems to be holding strong. So we'll see if we are ready for a big bounce back here in the near future. We'll talk about it in just a bit. Ethereum hanging tight around 4,600. XRP has surged its way back up in the last few days to over $3 a pop. Cardano up almost a half a percentage point this morning. And Dogecoin up 1%. Sitting right around that 22 cents up coin mark. In TradFi, really quick, let's see how the stonks are doing. Not a lot happening here either. The Dow Jones is sitting around 45,500. The Nasdaq's up 0.11% this morning, and the S&P is chilling. Not a lot happening at all. All right, let's go. We got a lot to do today. We're going to start with this morning's bull run. Let's hit the stinger and go to camera one. All right, well, it's time for this morning's bull run where we go over the top news stories of the morning. We got a lot to do today, so let's get into it. First up, the U.S. Commerce Department has decided it's time to make GDP sexy. Okay, Commerce Secretary Howard Lutnick announced the government will begin issuing economic statistics on the blockchain. Yeah, the same GDP that puts you to sleep in Econ 101 will now live on chain. Why? Well, because according to Lutnick, President Trump is the crypto president. The plan starts with GDP figures and could expand to other stats once the Commerce Department irons out all the details. Eventually, Lutnick says this blockchain magic will be available for the entire government. Now, a lot of this data is already public, like the census, for instance, but putting it on a blockchain gives it a tamper-proof sparkle that we're all looking for. Now, this isn't exactly groundbreaking for the U.S. In 2024, California put 42 million car titles on Avalanche because, of course, California did. Elon Musk even floated the idea of running U.S. government on chain. Oh, there it is. Yikes, scaring me, Elon. Now, this was all before his relationship with Donald Trump turned into a messy public breakup. You remember that. Now, this all comes after Trump has been repeatedly trashing the U.S. economic data and fired the Bureau of Labor Statistics commissioner after a jobs report that he didn't like. So the solution? Put it on the blockchain, because while blockchain guarantees tamper-proof storage, it doesn't guarantee the data isn't cooked before it even gets uploaded. Garbage in, garbage forever, as they say. But still, this is the federal government moving its own crown jewel numbers onto crypto rails. It's adoption, it's transparency theater, and it's one more reason Bitcoin's future keeps looking brighter than Washington's spreadsheets. All right, so joining us today for this morning's bull run, we got one of my favorite people, Piotr Bedkowski from Zappo Bank. Piotr, how are you this morning? Always great to have you on the show. Thanks for joining us.
I'm super happy to have you, for you to have me, Hank.
Yes, the pleasure is all ours. We got a lot of news to talk about today, my friend, so we're going to jump right into it. Hang tight. We're going to bring you back in just a second to chat. Sound good?
Absolutely. Let's do it.
Rock and roll. Okay, so the CEO of BlackRock, you might know him as Larry Fink, the world's largest asset manager, is back at it. In a recent interview, he said Bitcoin is digital gold. And let's be clear, calling Bitcoin digital gold in 2025 is like calling Taylor Swift popular. Congrats, by the way, Taylor. We're really happy for you. We've heard it before, Larry, but hey, when the guy who runs $10 trillion in assets says it, Wall Street finally nods like it's gospel. Bitcoin is gold. That's me singing. It's not good. Now, Fink emphasized Bitcoin's legitimacy and growing recognition in the financial sector. He made it crystal clear that while Bitcoin is not a traditional currency, it has one job: to be a store of value. That's Wall Street speak for we don't understand memes, but we do understand gold bars. Now, according to Fink, Bitcoin shines brightest during economic uncertainty. Fiat currencies melt down, inflation kicks in, and suddenly everyone remembers that there are only 21 million coins to go around. He even called Bitcoin the currency of fear. Okay, which, let's be honest, makes it sound like something Batman should be hoarding in a cave. But he's not wrong. People do pile into Bitcoin when their national currency is about as stable as a Jenga tower during an earthquake. And let's not forget BlackRock's own baby, IBIT, their Bitcoin ETF. It has become one of the most popular ways for institutions to touch Bitcoin without actually having to touch it. Strong ETF inflows have been rocket fuel for Bitcoin's price this year. Earlier this month, Bitcoin hit an all-time high of 124K, driven in large part by ETF demand. Since then, Bitcoin has pulled back to around that 111, 112K mark, which for Fink is basically a buy one, get one sale. All right, we're bringing in Piotr. Piotr, Larry Fink finally admitted that Bitcoin is digital gold. Does it actually mean more when the world's biggest money manager says it, or is this Wall Street catching up to what Bitcoiners have been screaming into microphones for a decade now?
Absolutely. It's a great news. I mean, it legitimizes the whole thing. I think the connection that Larry Fink is making between Bitcoin and is gold is actually something that allowed him to grasp the value proposition of Bitcoin itself before, because from the outside, someone may look at crypto industry and look at all the scams and plethora of altcoins and all the projects, and it's sometimes also it's a technology in a search for a problem. Whereas here we have a clear confirmation that that the use case is a store of value, and this is like the manager of one of the largest holdings on the planet is telling you this, that he sees this asset class as this asset as a digital gold. So that is something that is basically legitimizing it and making more people interested in it. And and it's we spoke about this before, but it's also broadening the adoption for institutions and for everybody else in the space to jump in and have some exposure to digital gold, the gold of 21st century, which is Bitcoin.
Yeah, I mean, when the head of the evil empire BlackRock starts calling Bitcoin digital gold, I think we can officially say Bitcoin is here and it's here to stay, despite, there's still some people out there that don't believe in it. But they'll get on board. They all do eventually. Another thing that Larry Fink said that I also thought was pretty funny was that he called Bitcoin the currency of fear. Do you think that framing is accurate, or is that just a polite way of saying fiat sucks and Bitcoin wins?
No, so investors have always been looking for safe haven, right? The place to store their money in times of uncertainty and turbulence, and especially now, if you look at what's happening in the from the geopolitics perspective, with U.S.-China tensions, with tensions between China and U.S., Russia, Ukraine war, what happens in the Middle East, markets become very turbulent because of those news. And, we have some risks, some geopolitical risks materializing. And then when they are materializing, investors are looking for safe havens, so safe place. And traditionally, those safest places were gold, and sometimes real estate, but definitely not stocks, definitely not equities. And now Bitcoin emerging as a digital gold gives investors basically a place where to park that money, especially in times of increased uncertainty and geopolitical risks that we are currently living in. And the US was also, there were lots of people in US and investors that were always traditionally big fans of gold investing, and because that's something that always felt like a more tangible thing, right? That you can touch it, you can hold it yourself like a bearer asset, and it doesn't have all those risks that normally equities have. And now with Bitcoin, it's not only that, I mean, it's some people even say that, the gold is like analog Bitcoin. But Bitcoin is doesn't have all those risks that equities have. So Bitcoin is even better in that regard. So while historically we've seen, for example, every time something happens in the markets from the geopolitics perspective, Bitcoin dips a bit, then Bitcoin recovers, and it's just basically a fear that it passes, and we see like a few weeks later Bitcoin rebounces. So I think more and more investors will be looking at not only gold but Bitcoin, especially as tensions increase and the geopolitical situation worsens.
Yeah, absolutely. I mean, people do want to be able to hold and feel things, but like I tell my crazy uncle who buries gold in his backyard, you can just put your Bitcoin on a data stick and hold that and bury that in your backyard, and it's the same thing, except you can just plug it in your computer, and then it's a lot more liquid than gold can be. So yeah, totally agree with you there. And BlackRock's IBIT ETF, as we talked about during the story, has become an absolute monster. People are putting their money into IBIT. From your vantage point at Xapo Bank, what are the biggest downstream effects of these ETFs on Bitcoin's price action and liquidity?
Yeah, so, at Xapo Bank, we've seen people asking for those Bitcoin ETFs. They also want some exposure, but obviously majority of our customers, they prefer real things. So they don't want second best. They want the Bitcoin itself because of all the things that holding Bitcoin, all the advantages that holding Bitcoin has over having a only limited price exposure when you are holding the Bitcoin ETF. So because of when you are in the Bitcoin ETF, you only have a price exposure, but you cannot actually send it, receive it. You cannot take self-custody of it. You don't actually hold it. It's just a wrapper that gives you some exposure, but it's pretty limited. Whereas with holding Bitcoin gives you all those additional things that you can do with that, like self-custody, you can send it, receive it, obviously, and do more things with that Bitcoin than only getting a price exposure. So what we've seen from our members and from our customers, they prefer having Bitcoin over Bitcoin ETFs, although we are not, sort of downplaying the fact that there is some specific customer segments that are interested in Bitcoin ETFs. And especially in the context of, Bitcoin ETFs are the wrappers, and the ETFs themselves, they've been known in the financial markets and in traditional finance for years now. So you take those Bitcoin ETFs, you go to your bank, and they can recognize what that is, right? Whereas for Bitcoin, it still feels like this, risky crypto asset that they cannot, or they couldn't custody till now. So yeah, there are pros and cons here. But yeah, I think that the overall impact of Bitcoin ETFs is positive for the ecosystem and for the Bitcoin community as well.
Yeah, I couldn't agree more. I mean, it really kind of feels like an on-ramp to people that want to dip their toes into the orange water before really going full on in, you know. It feels like traditional finance, so they feel more comfortable investing money in it, and then once they get used to the old number go up thing that we've seen time and time again, I got to imagine more people are going to be interested in natively owning Bitcoin on their own, you know, cold storage in their own wallets rather than through an ETF. So yeah, I would have to agree with you on that one. And in the last couple of weeks, we've seen some interesting price action from Bitcoin. It hit a high of 124K. It pulled back below 110 even for a bit. But now we're sitting around that 112 level. Do you think that institutional players like BlackRock see these dips as real buying opportunities? Or do they secretly love scaring retail out of their coins? Is what we're kind of seeing right now too, as it seems to be retail kind of has the paper hands a lot of the time.
Yeah, sometimes it really happens. But if we look at the customer behavior, especially at Zappo Bank, I mean, we have lots of customers that are long-term holders. I mean, the direction is clear. Those people are buying more. They are not, selling. They are just using those dips to get cheap sats. And as a Bitcoiner, I always thought about those temporary dips as a kind of opportunities, because one could argue where we are in the cycle. I think on the Bitcoin ETF front, I think the incentives are that Bitcoin ETFs, of course, they want to grow their offering, right? So they want to have more Bitcoin under management. So obviously, if people use those temporary dips to accumulate more Bitcoin via Bitcoin ETF, that's obviously something that's desirable from a BlackRock point of view. And also from our point of view at Zappo Bank, I mean, we love seeing people increasing their balances and, getting more Bitcoin, because these are great times. I mean, when Bitcoin shoots up at some point, I think I mean, there is some debate, where are we in the bull run? But I think there is still some few months maybe that we may see some upward trend. And, people will be missing out when the Bitcoin shoots up. And Bitcoin shoots up always like unexpectedly right now. No one's sort of knows when it will happen. But when it happens, it rips up 5%, 10%. And we've seen this during this cycle and before. So yeah, I would say those dips are great opportunities to accumulate more. Even though we've been running in this bull run for quite a few months now. And another separate discussion is whether the 4-year cycle still holds, and did it hold previously? And was it because of Bitcoin halving cycle? Was it because macroeconomic cycle? Was it because liquidity cycle? Or was it because, US presidency? No one really knows. There are conflicting and debating opinions on this. My personal opinion is that although those cycles may not be as pronounced as they used to be, right, in the past, right, where you have those like 70% drawdowns and you have price exploding like during COVID, you still will see some patterns emerging around the 4-year mark. And so maybe they won't be as pronounced, but I think that 4-year cycle will still continue. We'll still continue to see the 4-year pattern playing, till 2030 and beyond.
Yeah, it's certainly a point that's up for debate right now. I mean, we have all this institutional money now that's in the mix. Not to mention the halving rewards are getting quite small. I think it's like almost 98% of all Bitcoin has already been mined right now. So you combine these factors and we might still see these cycles in some form, but like this current one might be a longer cycle. And I do think, at least for the whole, they're going to be a lot more muted in terms of overall volatility. And we've seen that this year specifically, as I believe the NASDAQ on the whole has been a little more volatile than Bitcoin itself over this past 8 or so months. So yeah, we'll see how that plays out. But the one thing you can't always count on with Bitcoin, it's going to do exactly what you don't expect it to do. So whenever it's down, you then see it rise out of its grave, like that famous meme of the Undertaker from WWE wrestling. So we'll see what happens here, but I think we still got some legs in this current run to go. All right, stay tuned, Piotr. We're going to read this next story. I'll bring you right back because right now I want to talk about the fight of the century. And of course, we're talking about Bitcoin versus gold. The question, will Bitcoin replace gold by 2030? Now, if it does, one Bitcoin would be worth around $1.15 million. Now, this isn't wild speculation either. This, my friends, is math. You see, gold's total value is around $20 to $22 trillion. There's about 19.91 million Bitcoin all around. Divide, and you get about 1 million to 1.1 million per Bitcoin. That's 1.15 million. That figure is what happens if Bitcoin completely takes gold's market. Now, even grabbing half of gold's market would put Bitcoin over $500,000 per coin. 10% gets you past 100K. So what makes Bitcoin the challenger here? Well, of course, it's the scarcity element of it, right? Gold is rare, but nobody actually knows how rare. We dig up about 1% to 2% more gold every single year. And if someone, invents a better shovel, that number changes. If we go on one of those asteroids that has like $4 trillion of gold and start mining it there, that number changes. Bitcoin, meanwhile, is programmed scarcity. 21 million coins, locked forever, supply cuts in half every single 4 years, and predictable, unchangeable, no surprises, right? We love that about Bitcoin. Then there's the control aspect, right? Gold sits in vaults, banks, and institutions that governments can influence. Bitcoin has no central authority, no bank, no government that can stop it. Transactions are public, they're transparent, and censorship resistant. Moving value? Try sending a fortune in gold bars across borders. It's a hassle. It's slow, expensive, and frankly, very risky. Bitcoin, though, takes minutes, an internet connection, and you're done. Authenticity? Gold requires experts, tools, and trust. Bitcoin? Every coin is verified on the blockchain. It's counterfeit proof. Now, critics love to point out Bitcoin's volatility. Historically, they're right. Gold's stability made it the safe haven king. But that is all changing. In Q1 of 2025, Bitcoin's volatility was 52% compared to gold's 15%. By August, Bitcoin's volatility dropped to 45%, while gold was at 12%. Still higher, but the narrowest gap ever. Why? Well, the big money, as we just talked about with Piotr. Institutional investors and Bitcoin ETFs entered the space in 2024, smoothing out price swings. Clearer regulation is also calming the nerves of people out there. Bitcoin is growing up. It won't be as stable as gold by 2030, but it certainly seems to be trending that way. Meanwhile, institutional adoption is exploding. BlackRock, Fidelity, and other titans brought in spot ETFs. Corporate treasuries are filling with Bitcoin. Strategy Inc. alone holds like 632,000 BTC. Public companies with Bitcoin nearly doubled in the first half of 2025. Even pension funds are in. Wisconsin, Michigan, and UK funds bought Bitcoin ETFs. Cal STRS, the third largest U.S. pension fund, now has $133 million in exposure through Strategy. But central banks, they're still hoarding gold. They bought a record 1,000 tons in 2024. A 2025 survey, in fact, found not a single central bank holds Bitcoin. 93% said they have no plans to start, citing volatility and security concerns. Younger investors, though, are all in on BTC. A DeVere Group poll found 73% of investors aged 24 to 45 would pick Bitcoin over the long haul against gold. Another 2025 poll found 16% of Gen Z and 13% of millennials save in crypto long term, compared to only 12% of boomers sticking with gold. Regulation here, though, is the big wild card. The EU is rolling out MiCA. The US and UK are inching toward clarity. Fair rules, you see, help Bitcoin grow. Bad rules, though, could slow it down. And unlike gold, Bitcoin faces digital risks. The whole quantum problem, for instance, 51% attacks, and software bugs. Developers are already working on defenses, but the risks do exist. So will Bitcoin eat gold's entire market? Maybe not. Gold has a history. Bitcoin, though, has code. Gold is the legacy safe haven. Bitcoin is the digital hedge. But even a partial shift puts Bitcoin's price in 6 figures, and a full takeover puts us in 7. All right, bringing back Piotr. Piotr, Analysts say if Bitcoin eats gold's $20 to $22 trillion market cap, we're talking $1 million per coin. Do you buy that math, or is it more of a great headline for gold versus Bitcoin in the great debate?
Yeah, so I recall there was this famous quote by JP Morgan, who said that gold is money, everything else is credit. And the reason why he said that was because, everything else except things like gold, they are scarce. We basically can produce more of and will produce more of. So let's say a silver or like any commodity, anything basically which raises in price, we'll basically make sure that we'll produce more of, so that price will go down eventually, right? And gold in that regard is great because it only has this 1 or 2% inflation rate. So it's basically the supply is increasing at 1 or 2% per year, because that's our mining rate, right? But as you said, if we find the unexpected reserves in South Africa or wherever of gold, all of a sudden we'll be able to mine this gold and we'll increase the stock. So that stock to flow ratio will change, right? And that basically would mean that gold would become a less scarce asset. And obviously gold was the best idea up till 19th century. I mean, as a humanity, we didn't have better idea of something scarce than gold. So that was the very good idea. But now if you compare this to Bitcoin, which we already know that has lower inflation rate and supply rate than gold. And not only that, but it also has fully capped, not changeable limit on how many Bitcoins we'll ever have in circulation. Then this all of a sudden is a perfect scarcity that we haven't encountered anytime before, and that's why people don't have good intuitions in general around how Bitcoin price will behave, because we never have an asset like this before, right? With a 21 million cap that cannot be changed and won't be changed, right? I remember if you look at the history also, like the amount of gold in circulation changed, right? At some point, there was when Columbus was, discovering America, and they conquered, the Aztecs and all the Indians, and then they took all their gold, right? And they took that gold and they shipped it over the ocean to Europe, which led to the price increases of everything all across the board. Why? Because all of a sudden we have had those additional gold coming from America to Europe. And in the same way, as you said, like if we found the gold on an asteroid or whatever, and we could mine it, we can improve that technology, we could mine it, then all of a sudden we would flood the market, the value of gold would go down. Now, having said that, if you look at the performance of the gold, since, I don't know, 60s, it was, or Nixon shock, right, in 71, when the coupling of gold happened, gold was only up and to the right. Obviously, there were ups and downs along the way, but back in 71, what was it? Like Nixon was promising like $30 around that rate, like around $30 per ounce. Now gold is around 2,000 or even more than that, right? 2,400. Per ounce.
I think it's like 30, 35. It's up there.
Or even higher. Yeah. So even higher. So that shows you how much more US dollars, how many more US dollars are in circulation that we printed out of thin air and introduced into the circulation. And all of that excessive liquidity always ends up in the heart and the most scarce assets out there, meaning Bitcoin and real estate. Right. I think one eye-opening realization was also when we looked at the S&P 500 returns, but not in USD terms, but in gold terms, denominated versus gold. And if you look at that, because conventional wisdom is like, the S&P 500 moves up, right? Like 7 to 10% per year. There are obviously like some years when it crashes, but then it recovers, and basically economy is going up. And if you denominate in US dollars, then obviously you see this trend. But if you switch to gold standard and you see in gold terms, it's shocking, it's eye-opening, because you actually realize that we are on the level of a late 60s. So in many cases, it would be better to keep and hold gold for a long time rather than invest in stock market. Now, bringing Bitcoin to this picture is like, Bitcoin currently is 10%, what is it, 12% of the gold market cap. So and it's currently we are at around 100K, 110K, whatever. So yeah, I agree with that math. So if you assume that we have to reach the parity, then this would wind up with a price around $1 million per coin. But there is a caveat here because Bitcoin is obviously, it's not as good as gold, it's 10x better than gold, or like 100x better than gold, obviously, because of those different characteristics. Because you can keep it in your brain, having brain wallet, you can keep it in your brain and move. You can move, billions of dollars of Bitcoin all over the world, like in minutes, without asking anyone. And I mean, as a comparison, you can try doing that, like taking gold bars and trying to change the country take your gold bars and try. Let's see how that goes, right? So all of those problems with gold, the gold is cumbersome and it's costly, expensive. You need vaults and guards to help you secure it. And because of all those problems that Bitcoin doesn't have, Bitcoin is at least 10x valuable, if not way more, which means that long-term perspective is, we're not talking even about like $1 million per coin. We're probably talking about 5 to 10 millions per coin, which is funny coincidence because we also, if you look at early Satoshi writings, we are recently looking at what Satoshi was writing on the early Bitcoin forums. He was already doing those calculations, and he said that if Bitcoin is as successful as he thinks could be, and if it really became part of the global financial system and it really captured that market cap, the price would be around $10 million per coin. And this is what Satoshi has written in one of the early forum posts. So you can see all those pieces. They would sort of suggest that long-term play, and the direction is clear. The only thing is how fast we'll get there, right? Whether it's going to be like 10 years or maybe it's an even longer play, like 30 years. And it's going to be very bumpy road along the way, right? So we are not going to get there in the straight line. It's going to be like up and down, up and down, up and down. And you need to withstand that volatility. And, lots of people will sell across along the journey. And that's fine too, right? We are, I think the more scarce thing that Bitcoin is only our time. And, some people that got in early are cashing out. That's fine. And we'll probably cash out this at some point as well.
Yeah. No, people talk about the volatility of Bitcoin, but it's really not the volatility of Bitcoin. It's the volatility of human nature, right? And freaking out during price swings and getting those paper hands and then selling. And that's often what causes those price swings. But really, to your point, we're at the very small tip of the iceberg. It's like you only see the little top part of the iceberg and there's this huge behemoth beneath it. And that's really where we seem to be at with Bitcoin right now. And anyone who takes a second to do any research seems to understand that. But with that being said, we're still seeing central banks loading up on gold instead of Bitcoin. Why do you think a lot of these traditional institutions are stuck in the 20th century and aren't able to get comfortable with Bitcoin as a digital hedge yet? Is it just a fear of the unfamiliar? Is it maybe something else?
Yeah, it's something which you already mentioned. I mean, Bitcoin is still small. I mean, it's still so early. And it's funny if you look at this because we're already at 100K, 110K. I mean, how can we be early? But yes, we are early. And especially for a traditional institutions, for a big established banks, for them, it may be a little bit too risky bet still to accumulate. I mean, if you're a central bank and to start accumulating Bitcoin instead of gold, although we've seen, some countries that are doubling into this and maybe looking how feasible that would be, etc. I would love my own country to have a look at this and start thinking about this. Obviously, I can see that central banks are obviously on the gold spree and they are buying gold and accumulating more and more gold. And guess why? Because obviously gold is money, right? That's a scarce asset that will hold its value, especially given some geopolitical tensions and turbulence in the world that may be coming. So, the gold is a safe haven. But banks won't do the switch right away. I mean, there will be pioneers. It's a new technology. It's like trying to, convince old established companies that, some new technology that is only emerging, is they are conservative by default, and that's why they are, in the same way they are saying that, nobody got fired for buying from IBM. It's like a safe bet in the corporate America. So it's like, nobody, you cannot go wrong buying gold. Like if you are in charge in the central bank, you work in the central bank, guess what? Let's buy some gold, right? It's a proven 5,000
Right.
years idea that worked. And even like look at the price performance of the gold for the last few years. I mean, it's been quite great. I mean, great performance. Gold performed well, and banks and countries that were stacking more gold, obviously, it was a good decision, especially in that post-COVID inflationary environment where the balance sheet of Fed increased so many times over. We printed, how much was it? Like 40% of all dollars in circulation. We printed it in 18 months or something like that. So if that happens,
I think it
such
was
an
like 25,
inflationary
30,
environment.
yeah.
Yeah, so if that happens, I mean, you need to have a hedge, and gold is natural hedge for that. Now, Bitcoin, obviously, I love for some of those central banks to consider Bitcoin maybe on the side. I mean, obviously, if you look at the countries that own Bitcoin, is US and China. We've all seen Germany selling their Bitcoin, at 50K or something. But yeah, it's the strategic Bitcoin reserve. You have that one as well. Apparently, they are not buying more Bitcoin, but they are at least not selling, which is good. And
Right.
yeah, I think it will take. It's not so in this cycle. It's way too early, but it will take a few cycles. Maybe it's this
Yeah.
2030 or something, and I think we'll see the central banks buying Bitcoin as a part of their, maybe not like all in, but having few percent allocated to this. I can definitely see this coming.
Yeah, no, I think they'll be testing the water sooner than later. And I think that something that people are failing to take account for a lot is that, well, a couple things. One, it's that we're in the midst of what could be the greatest wealth transfer of all time, right? As our grandparents and our boomer parents start passing away, God love you, hope you live forever. But as they do, that money is then going to be transferred to these younger generations. And as we saw in the story, younger investors overwhelmingly prefer Bitcoin over gold. And at that point, for a lot of these people, Bitcoin will have always been a thing during their time on Earth. So it's a lot less unfamiliar, and it's a not new thing to you if you've always been exposed to it. So with that being said, do you think that this generational shift all but guarantees that Bitcoin eventually will take gold's crown? Or are we maybe underestimating gold's zombie-like staying power and it'll be here a lot longer than we think?
Yeah, so there is definitely an argument that uh, you know elderly people are not first to change their long-held beliefs and deep convictions, right? And if they saw the gold during their life, and for them Bitcoin is something new and unproven, then obviously only when the generational change will happen. So literally new people with fresh minds, maybe younger, maybe people, as you say, like digital natives that were using Bitcoin, and for them Bitcoin is no risk, and they just like, it's obvious that they hold Bitcoin. Those people will start joining those big institutions and start reforming them from within, or start sharing new ideas, etc. So this will definitely help. Yeah, because there is an argument that some people will just will never change their beliefs, old entrenched beliefs. It's like every time a new technology of that caliber comes, whether it was light bulb or whether it was like electricity or computers, there's always like a new generation that sort of takes this technology and brings this to the masses, because that elderly generation is basically still entrenched, and their mindset is not really ready to adopt something new. Um, Now, but Bitcoin use case as a store of value. I mean, even this store of value thing, it's such a such a tiny market cap now still, because if you compare it to all the different things that people are using to store their wealth, and it's just only this, like, okay, you have paintings, you have real estate, it's huge. I mean, real estate is totally huge. You have other stuff. I mean, you have watches, like high quality watches. You have all those different things that people are buying just to keep their money, just to invest into something so that it's not sitting on my checking account with 0.2% interest, whereas, price of my groceries is doubling every 2 years or something. So people see that, and they're just looking for anything that would hold on its value. So if people make a switch, a mental like change, or you can see those people like they are living from rentals and they're buying more and more real estate, like whether it's apartments or next houses, like there's this person is buying yet another house because they just need to park the cash somewhere, and they see lots of hassle with doing that, and then they compare it with Bitcoin, and then they make a switch, and then they cash in and move to Bitcoin. This is the end game, because you don't need real estate. You don't need expensive painting. You don't need expensive car, like whatever. You don't need anything, because Bitcoin solves this fully. And when Bitcoin is captured, this use case fully, that price is way, way, way higher than it's currently. And so one could say we are at 1%, 2% maybe of the total potential addressable market. If people start using Bitcoin for the sort of value fully. And
you're right. I mean, literally, especially in today's global economy where we have access to literally everything on the planet thanks to the internet, people are looking to put their money anywhere else but fiat. For instance, I just saw a story about, Kevin O'Leary, Mr. Wonderful from Shark Tank, co-owns a Kobe Bryant Michael Jordan card that's valued at around $13 million. And he was like, yeah, basketball cards are an asset class of their own. So people, now that we have there's 8 billion people in the world, somebody somewhere wants or puts value on so many different things, when the truth of the matter is Bitcoin is meant to hold value. This is what it was kind of built for, right? Was to hold value so I don't have to put my money in shoes or expensive watches or basketball cards. I could, but why wouldn't I just do it in the thing that's incredibly easy to transfer? I can self-custody myself, and over its entire time period has only gone up and to the right if you scale back. So yeah, to your point, it's a new era of the world that we're ushering into, and old guard is always going to be reluctant to change from what they know. Gold always worked for me and it always will work for me. And they might be right, but it looks like something has come along that is going to work a little better, and it takes time to make that adjustments, like you said. Hang tight there, Piotr. We got one more story. I'm going to get right back to you, because right now I want to talk about some of the analysts over at Bernstein. They think Bitcoin could break its own rules. What do I mean by that? Well, historically, Bitcoin follows a 4-year cycle tied to the halvings. There's a breakout, a bunch of hype, a correction, and then an accumulation phase. That pattern would point to a peak later this year or early next year. But Bernstein's team, led by Gautam Chagani, is betting this cycle will stretch until 2026 or even 2027. They point out that Bitcoin already hit an all-time high of 124K on August 14th. They see the price climbing to 200,000 within the next 6 to 12 months. Now, their reasoning behind this is, well, institutional adoption is kind of changing everything. ETFs launched last year, regulatory support is finally lining up, and the Trump administration is aggressively pro-crypto. This year alone, the U.S. passed the Genius Act, its first federal stablecoin law. The SEC rolled out new policies under Chair Paul Atkins, and Trump signed an executive order to establish a federal Bitcoin reserve. Bernstein calls this mission critical mode to make the U.S. the crypto capital of the world. But not everyone agrees. Martin Lineweber from Market Vector says assuming a longer cycle is a little too risky. He sees Bitcoin peaking at 140 to 150K later this year before retracing. Alexander Bloom from 2 Prime says Bitcoin is caught between old and new dynamics. Institutional money and ETFs have reshaped the market, but greed and fear still drive behavior. Lineweber adds that halvings matter less now than they did before. Instead, Bitcoin cycles may follow macro liquidity. When debt refinancing is tight, investors tend to dump risk assets. When the Fed eases, capital flows back, and then Bitcoin tends to rally. Right now, traders are betting on a 73.5% chance of a Fed rate cut in September. Powell, well, he spoke at Jackson Hole last week, didn't quite confirm, he didn't deny, but it seems like the winds are tending to go in the favorable direction for us Bitcoiners out there. Meanwhile, Bitcoin is up around 111, 112K right now. That's around 20% year to date. So we're kind of left with two scenarios here. Either Bitcoin keeps up its 4-year rhythm and peaks around October or November, or the Trump-era institutional wave extends the bull run into 2026 and maybe into 2027. Either way, every path points higher before it points a little lower. All right, we're talking to Piotr again. Piotr, Bernstein thinks this bull run could stretch into 2027, breaking Bitcoin's famous 4-year cycle. Do you think Bitcoin is finally maturing past the halving rhythm? Or is this analyst hopium in a new wrapper? What do you think?
I think 4-year cycles, we still need to know what was that caused the 4-year cycles in the first place. Because I think there is still a debate around, was it because of the halving is every 4 years, or was it because US presidency is every 4 years? Or maybe was it because the financing macro cycle also related to the US presidency and how the money is being spent is also every 4 years, like the way we set up the budgets, or was it something else at the play? I think the main assumption was that you have the cycles because every 4 years the supply of Bitcoin halves and you have less and less in circulation, and less Bitcoin is being minted. Now, I think this will still hold, although it will be less pronounced than it used to be in the past. Now, in the past, you didn't have Bitcoin ETFs, you didn't have institutional exposure, you didn't have institutional adoption, you didn't have strategic Bitcoin reserve. You didn't have that amount of attention around Bitcoin. Bitcoin is something known to a very limited amount of people, and it was something that, Bitcoin OGs and crypto cypherpunks and people in the crypto industry knew about, but it wasn't widely adopted. Now, as more and more people are going into the ecosystem, and you can actually buy Bitcoin via the ETF from your brokerage account, I mean, this changes the game because so many different people or pools of capital that couldn't before invest in Bitcoin now can with few clicks. And this basically, the fact that, Bitcoin ETF, they have so many Bitcoins already that you have the companies like MicroStrategy, with 600,000 Bitcoins on their balance sheet, all these things make the, Bitcoin ecosystem mature in a way that we won't, it's unlikely that we will see like 70%, 80% drawdowns anytime soon. I think what we will see, it will still see 40, maybe 50% drawdowns. I think that's healthy, especially when the hype is there. But yeah, it will be less pronounced and maybe a little bit more muted than it used to be in the previous cycles. But still, you should see the rhythm of the 4-year cadence, because after all, this is also related to how the miners are earning their fees, right? And how much they are earning and how much the price will need to catch up for the mining to be profitable. And yeah, so I think the cycles will be still there. The crypto winter at some point will come. There is a discussion between, whether it's next year or maybe 2027. If someone says it's 2027, maybe they are a bit disappointed by the performance right now, because maybe they thought that we would be way higher by now than where we are. But this cycle is different also. It feels a little bit different from other perspective as well, because, for example, the retail demand doesn't seem to be there. I mean, it's still like, it seems like we entered the institutional adoption. That's fine. But, if you look, for example, at retail interest, and something that we saw during the previous cycles, the explosion of Google searches and people interested in Bitcoin and cryptocurrencies every cycle was skyrocketing every time. Whereas this time we don't see this. And so So yeah, there is a very interesting debate where we are in the cycle. Is it rather early or is it rather late? And my personal opinion is that even though like that cycles may be a little bit less pronounced, I think in the long term, if you zoom out, then the direction is clear. And this is also something that we've been telling our customers at Xapo Bank forever. I mean, if you're considering investment in Bitcoin, you would need to consider at least this 4-year window and think about this in the mid to long term perspective, not as a short term trading opportunity that I'll buy it this month and flip it and sell it 2 months later, because you may get it right, or you may not get it right, and that will be bad outcome for you. You may lose money. So yeah, I would say zoom out and keep the focus on the long term.
Yeah, I think you're right. I think we're still going to see the cycles, but they're going to be muted. But I think a big part of that, right, is due to the fact that retail money often seems to chase after those high alpha plays. Those degens like myself would ape in, right, expecting this parabolic run and getting these 10x gains or what have you. But I think we're going to see that be a thing of the past, because with these more muted fluctuations, I think the retail interest isn't there the same way than it was previously, except for like they're aping into ETFs like IBIT and stuff. But yeah, no, I would agree with you here. All right, we got a wrap here, Piotr. Before we let you go, where can our audience find more information about you and all the amazing things that you and the gang are doing over at Xapo Bank?
Yeah, so I'm myself on Twitter under Piotr Bed, and also we're working on quite exciting stuff right now at Xapo Bank. We have recently got approval to launch a pretty exciting Bitcoin yield product, which I'm rolling out to our members as we speak, actually, and inviting early adopters and people to try it out and jump into the product. So that's pretty exciting. And so yeah, have a look at our website or reach out to me on the social media, and we can talk. I can tell you more about that if you're interested.
Amazing. Awesome. Well, we certainly appreciate you and your time and your expertise, Piotr. It's always a great time having you on the Blockchain Report, and we can't wait to have you back again very soon, my friend. I hope you have a great rest of your week.
Thanks for having me, Hank.
Pleasure is all mine. All right, we'll see you next time. All right, gang, we're going to go to a quick break, but when we're back, we're going to be joined by our crypto wunderkind, Luca Pagano, to help us read the tea leaves and tell you where Bitcoin might be going next. Stay tuned. All of that coming up on the Blockchain Report.
Security matters. Xapo Bank, the only way to bank your Bitcoin. Apply now at xapobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
Oh, it's beautiful, Hank. This is not financial advice.
All right, welcome back. It's time for Chart Talk with our chart shark and crypto wunderkind, Luca Pagano. Luca, how are you on this Wednesday? Good to have you back.
Hey Hank, it's a pleasure to be here. So thank you for having me. It's a good day of recovery, it seems, for crypto, you know.
It is, it is. Well, we're excited to have your guidance on this very interesting place that we're in the market right now. Back on August 14th, we saw new all-time highs. We hit that 124K mark. We've seen it dial back a little bit, I think as low to 108K briefly, then it popped back up, currently sitting around 112. Earlier this week on our show, we had our other chart shark out there, Mr. Big Beat himself, Stephen Orr. He was saying he was seeing a nice floor around that 110.5K level. What are you seeing from your seat at the table? What's the current floor right now for Bitcoin, and what are you expecting as we enter the end of the month of August?
Yeah, I mean, I think that's the question to answer here. I'm very much aligned with that view, honestly. And we can see very quickly, why or what my rationale at least is, from the perspective of the charts, of course, as you guys know, and we always say, this is not financial advice. So just laying out and spreading my thoughts here with you, Hank, and for the people looking at us. But yeah, I mean, in terms of the chart, you had last high, coming back to May, we topped at around $111,000, let's say, meet those. Then we had the pullback, and then we had the breakout, which was beautiful and led us to, $119,000, sorry, $124,000 almost, which we tested again, right? So for me, what I'm seeing is we've seen this area, this very important area tested, one, the breakout, then two, which we bounced back and went to all-time high again, and three, bounced back, now we're at it again, So I think this green area, which we draw last week, Hank, actually together, for me, it was the beating area, and we're right at it right now, trying to get out of it, which is healthy, So what do I think about here on these levels? I think we're at a very pivotal level in that sense. We should not be heading back, for me, to $108,000 or whatever and start like moving very slowly in that direction. I wouldn't like that because we may head lower to the 100Ks, in that sense. That's at least my view. What we should be doing from now, and it looks like people wants to do as well, is honestly try to start testing at least the mid channel and see maybe a pullback and trying to recover up from that. I mean, for me, that would be a very healthy pullback from all-time highs,
And right now it's Wednesday. As we've talked before on the show, it's important to close the week out on a strong note in order for us to hopefully see some upside momentum going into the weekend. What are the numbers that you're looking at right now that you're hoping Bitcoin closes out to at the end of the week, signaling hopefully some more upside on the way?
Well, that's honestly an amazing thing to talk right now, because if we see here, Hank, the weekly, the last weekly of the all-time high that we were talking before is exactly $112,000, more or less, So why do I say this? Because we're basically battling that right now. For me, this is already a good scenario. If we can close a little bit above here, for me, it's a good sign, of recovery. What would be the best scenario for me is to close above 114,000 meets, because that would bring us above the recovery, which led us to all-time high, remember? So in a weekly basis, what we would love to do this second half of the week, honestly, is something like this, So getting above 114,000 would be beautiful, but we're already at a good level. That's why I was saying, Hank, earlier, and I think that when we connect dots here together, it makes even more sense. It's you don't want to be slow bleeding to the second end of the week and finishing, at $108,000, $109,000, because that would, for me, communicate weakness into the weekly candles. You know, you want to finish definitely above $112,000.
All right, love to hear it. So we're looking at 114, hopefully by the end of the week. That means hopefully the bulls are back in control and we might see some more upside in the not too distant future. I love to hear it. Well, Luca, I got to tell you, it's always an absolute pleasure having you here with us on the Blockchain Report. You're the one man that can help us read the tea leaves. And as I've seen just over the last 8 months, you are pretty spot on with your analysis each and every week. Again, not financial advice to anyone out there, but the man's track record
Hank,
speaks for itself.
We try to do the best here, and I love to be here. So thank you for having me, and let's hope to analyze more charts together in the future.
Would love to do it. Remember, you can always follow Luca over at Roxom on X to get the best chart analysis out there. So make sure to give him a peek. All right, Luca, we'll see you later, buddy. Thanks for joining us, and we'll have you back real soon. Cheers. All right, we're taking a quick break. When we're back, though, we got more guests underway. Today is packed, so stay tuned. More Blockchain Report coming at you right after this.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
And welcome back to the Blockchain Report. Joining us today for our first of two deep dives are the team that's proving Bitcoin isn't confined to charts, price targets, or dusty conference halls. In fact, it belongs on the golf course, the pickleball court, and out in the real world where people actually have fun. They've built a network that fuses competition, camaraderie, and sound money into an experience that orange pill communities while creating unforgettable memories. Please give a big Blockchain Report welcome to the founders of the Bitcoin Sports Network, Chris and Frida Bobet, everybody. Welcome to the show, you two. It's a pleasure having you, and our audience is certainly thrilled that you're here as well. How are you doing this morning?
Thank you so much for having us.
Yeah, thanks for having us. Really enjoyed your intro right there. We might steal that from you.
You can take it and do whatever you want with it. No copyright here. So I want to get right into it. We got a lot to talk about. When they told me that you two were coming on the show, I was like, Bitcoin Sports Network, what in the wild world of sports is that? First, just tell me a little bit about it. What is it? What's the mission? What are you guys up to?
Yeah, I mean, in a nutshell, Bitcoin is all about proof of work. And what we've really noticed through our journey in the Bitcoin ecosystem is, like you were mentioning in the intro, that it's more than just financial rails for sending value back and forth between two peers. It's really about a lifestyle. It's about bringing the ethos and the ethics of what we're creating in the Bitcoin space into the real world and creating a community around that. So we figured there's no better thing to bring people together than a little friendly competition. And from that idea, Bitcoin Sports Network was born.
Do you want to hear the real story of how it was born?
No, that's boring.
Oh yeah, I want the real story is boring. All right,
the real story was, Chris is an avid golfer, and he put out a tweet at the 2024 Bitcoin conference that happened to be in Nashville. We were just about to move to this area, and so he's like, "I'm gonna go golf. Who wants to come? Who's a Bitcoiner that wants to come and golf with me?" And this morphed into this tweet going viral. And people reaching out to us and saying, how can we support you? How can we sponsor? How do we get, my whole crew out there? And so he was really pushed in a poll to put up a website. And ultimately, this was a nonprofit first event that we gave back to the core Bitcoin developers with any proceeds that we made there. And then we were like, wow, this is something that the Bitcoin community is really asking for. And so, then we did the next event, and that was
the Max and Stacy Invitational. Yeah. So based on the success of the Nashville event, what ended up being like 18 corporate sponsors, all in the Bitcoin community, whether it's in the financial industry or in the mining community, it was a really good melting pot of minds and ideas out on the golf course and in the after party and awards ceremony part of it. And then from that success, we got offered an opportunity to go to Las Vegas and produce the Bitcoin Golf Championship, the second annual Bitcoin Golf Championship we just had on Memorial Day. So that was a really good, exciting experience. And from there, it's just been kind of one event to the next event to the next event. And, we commonly talk to each other and say that we're two customers of our own business, which is usually very rare. Usually, you're trying to sell or an experience to your customer, but we find ourselves actually being the customer too. It's almost like the hair for men, I'm not just the owner of the hair for men. I'm also a client. And from the relationships that we've been able to foster from these types of networking and friendly sports competitions, it's really helped us grow our network in business and, become accessible and visible to people like yourself. And like you were saying, use the platform to really grow the Bitcoin network and to show that Bitcoin is more than just a financial rail.
That's amazing. So I'm a Bitcoiner. I play golf. Is there like a mailing list, or how do I find out about these events?
Just go to our website, bitcoinsports.network, and we have all of our events posted on there, and some of the future events we're working on.
Yep, and there's
very cool. I'll have to check that out.
We're growing, so there's some overhaul to some things, but yes, generally that's where you find us, and also we're very present on X under BSN_events. So if you want to follow us there. Yeah.
Amazing. That's so
Do you
cool.
do any sports?
Some research into go ahead. Oh, I do all the sports. Oh yeah. I'm a golfer. I play.
Oh, amazing. Okay. So besides golf, you do others? Okay, great. That's good to know.
pickleball, all of them. I think anything you guys put on, there's a good chance that I've played it at least competitively at some point in my life. I'm a big sport guy. Awesome. Now, I was doing some research into Bitcoin, your network, and something I saw that was interesting is you said you want to make Bitcoin fun. Do you think fun is kind of one of the missing ingredients for faster Bitcoin adoption? Like instead of another dry macro lecture, people might actually learn faster if they're swinging golf clubs and, sweating a little bit?
Yeah, it's like anything else. Too much of one thing is probably not a good deal. And we spend so much time in the Bitcoin community just like hard orange pilling, just like trying to shove the pills down people's throats and get them to understand, like, don't you get it? Inflation is theft. You're going to lose all of your savings. Your purchasing power is going to zero against Bitcoin. And at the end of the day, people trust and build things with relationships versus products. And sometimes I think we do a bad job of treating Bitcoin like a product and not like a relationship. And so we just felt like giving people more opportunity to kind of build on things other than finance and savings and getting ready for retirement and how are you going to put your kids through school and how are you going to afford your mortgage, or if you're in the younger generation, even afford a house. And really kind of bring it back to, the raw, just relationship building that humans kind of lack in this digital age. And again, bring it back into the real world and give people real experiences versus conversations that they can talk about over the phone.
And at that, real experiences that are interactive enough where you don't feel like you're cornered. Like you see some people doing educational things and you have to sit in a room and you have to listen and you kind of feel like I see this day to day. Grown people don't understand Bitcoin. They are curious, but they're afraid to ask the questions. And so when you get them kind of like in that environment of just play, it is much easier to ask the dumb questions and to get a foot in the door.
Yeah, lure them in with friendly competition and then soft sell them on Bitcoin.
I like that. It's like you're kind of Trojan horsing people as orange pilling them, be like, hey, it's a sporting event, but like, oh, we should probably talk about Bitcoin. But that makes a lot of sense, Chris, to your point. It's all about relationships, because when you go to like a dusty conference, it feels like you're being sold to, you're being pitched to. But hey, if you're on the golf course, you're having fun and your buddy goes, hey, I just got this stock tip, so to speak. I'm going to be a lot more interested to hear about it in that particular arena than I would be at a place where I feel like I'm being sold to. And I think people are more receptive in these types of environments that you guys are creating, which I think is just such a great freaking idea. I'm shocked no one's ever done it before. And you guys don't just offer golf, right? You have pickleball, you have fitness games. And I think you were mentioning to me, you have a big fitness event coming up. And I believe it was Isla Mujeres with the lovely Isabella Santos. Could you guys tell us about that?
Yes, absolutely. So this is, we saw Isa trying to orange pill, or is actively orange pill, this island of the coast of Cancun. And so we were just really wanting to support that. I personally just love it when I see a hardcore Bitcoiner with boots on the ground, real active everyday education. And it is especially difficult in Mexico, right? I mean, people don't have so much money that they can actually hold on to it. So what this is really, come down, be active with us. This is not, people have asked me, is this like a CrossFit competition? Do I have to, get fit for this? Yeah, I mean, if you can run a little bit, that would be good. But we modify a lot of the things. And it's really about the group experience, the community experience, really getting to know the Bitcoin community and, bring your best friend that might be Bitcoin curious. This is the event to bring them to. You have white sandy beaches and scavenger hunts and little quizzes around Bitcoin. And ultimately we educate over a period of 2.5 days where this event is happening. And there'll be a lot of island things going on. Like we'll go on a little catamaran cruise for half a day and swim in the water and all that, like while learning about Bitcoin and ultimately giving back to vendors on the community. So we'll have 4 teams competing for sats that are then going back to a vendor in the community to give back to the island and to actually show, hey, like these are Bitcoiners coming together that can make a change in some business's life.
That's amazing.
Yeah, we're big believers
than learning. Yeah, go ahead.
Oh, no, I was just say we're big believers in giving back to the Bitcoin community wherever we can, and so we always like to have some sort of charity or some sort of community give back at each one of our events where possible. And so we've given back to like the Bitcoin core development team. We've given back to Operation Bitcoin, which is a nonprofit for veterans that are in the Bitcoin community. And also in this case, we're giving back to the island of Isla Mujeres as we help them orange pill their futures. We can be excited to be able to get some really good boots on the ground experiences with fellow Bitcoiners and kind of build these lifelong memories together on how we did our part in the beginning of Bitcoin to help move the initiative into a brighter prosperity for everyone.
Yep.
That's amazing. It sounds like you're not just, giving back, but you're actually making learning about Bitcoin fun, a lot better than like reading the white paper or something, for instance. And as we all Bitcoiners know, doing your research is that first step to orange pilling yourself. And it certainly seems to be working. I mean, your Max and Stacy invitational that I was reading about has already become a pretty big deal in El Salvador, which makes me wonder, we just had them on the show. They're great. How did your partnership with Max and Stacy happen? And what's it like working with two of Bitcoin's loudest and proudest OGs?
Yeah, well, that was kind of one of those, Bitcoin can make your dreams come true kind of moment. And I've told Max and Stacy this before. They were my orange pill. I used to just devour everything that they put on RT and all the interviews that they did, and just really kind of exposing me to all of the stuff that was happening in the traditional finance macro world. And as I got bigger and bigger into the Bitcoin community, Frida and I, we decided that we wanted to write a book for children to help the conversations of families start talking about money with their kids, because we realized that most families don't really talk about money, even though they use it regularly and it can be a hot topic in many different discussions. People don't really know much about it. So we wanted to start that conversation. So we dedicated that book, Bitcoin for Kiddos, to Max and Stacy back in, I think, 2018 or 2019. And then finally, after we did the golf event in Nashville, one of our close partners was Unchained Capital. And Max reached out to Unchained because he knew that they had been part of this event and asked if they could help him produce a golf tournament down at his country club in El Salvador. And they basically said, well, look, we don't do that. That's not our business, but we know a guy who can help you. And so he got me in touch with Max. And then next thing I know, a week later, I'm in El Salvador shaking hands with Max and Stacy and, moving into the future.
Oh, that's amazing. Bitcoin bringing people together and making things happen. That's what we love to hear. I also saw that YouTube pitched Bitcoin Sports Network to corporations as team building opportunities. How do you go about convincing a CEO that Bitcoin plus pickleball or Bitcoin plus golf is a better investment than another boring hotel ballroom seminar with stale coffee? I think I just convinced myself. But what's that process like? Because I know not everybody's open to Bitcoin yet, but one at a time, those dominoes seem to be falling. What's your guys' process like that?
Yeah, we kind of looked at it like, Bitcoin is, it's marketed as built for the sovereign individual, but in reality, we're all part of a network, we're all part of the same team, and we should learn our strengths and weaknesses of each other and use our leverage as a team together to make a more prosperous future for whatever our goals happen to be. And so from a team building side, it can allow, a lot of companies in the Bitcoin space are young, right? They're only 1 or 2 years old, maybe 5 years old is like an old company in Bitcoin. And the teams are typically small and they're spread out around the world, and they don't really have a lot of physical interaction with one another outside of potentially a conference where they're sitting in meetings, kind of trying to sell, or, absorb. And so it doesn't really give them a chance to really learn about and connect with each other on a more personal level. So we try to create events that kind of break down the barrier of, okay, there's Bitcoin education involved here, but it's more about building and building that team that you're looking for and understanding each other better and where those friction points are and how people, handle stress and how people also handle challenges and then, solving problems. And so this builds tighter, stronger teams that we think will, again, help the businesses in Bitcoin overcome the challenges that we have to come.
And ultimately, we don't have to do a lot of convincing because there's a lot of word to mouth. So even at the first event, we were like by the owners of the Bitcoin conference. They told us we were the #1 side event that they heard about, independently of, us saying anything. And so I think people are just excited to have new room to ultimately be out in nature, because we're not created to be inside of buildings all the time. And so it's just really been a steady flow and steady stream. And I think the bigger vision here is obviously to convince more fiat companies to come on our side, right? And so we believe we're very early in that, and that there will be more to follow. And so we just want to be ready and prepared when those guys are ready to come and cross the line.
I love that.
And for those who aren't ready,
too, because go ahead. Yeah.
Oh, nothing. I keep cutting you off. I apologize for that.
It's a delay. Yeah.
Oh, you're good. No, it's a little bit of lag. So you're good. Go ahead.
Okay. Yeah, I was just gonna. I don't even know what I was gonna say now. I lost my train of thought.
All good.
That's right. I'll save you till you think of it. I was just gonna say it's really interesting because, when you're playing sports and you're also trying to kind of indoctrinate people into the orange pill lifestyle, if you're in a conference room, your guard is up. Like, nobody wants somebody else to change their mind if they know they're trying to change their mind. But if I'm sweating and playing sports and you're telling me about Bitcoin and I'm like, there's only 21 million? It's deflationary? But it's solving the monetary system? I'm going to be a lot more open to new ideas because I'm not thinking about it the same way as I would be in a conference room. So I absolutely love this angle you two are taking. And you said you donate to a lot of good causes. And at some of your events, the Bitcoin prizes go straight to local businesses, which I think is really amazing. So it makes me wonder, how important do you think that grassroots angle is toward adoption? And do you kind of see it as a way of orange pilling entire communities, one small business at a time?
I would say so. I think specifically right now, we have that theme going on in the Bitcoin space. Newbies that come in might not understand that they're just buying paper Bitcoin. And so I think initiatives like ours are really because ultimately we don't stand on stage and preach about Bitcoin. That's not what we do at our events, right? We have people there, like we had the Bitcoin hardware store in El Salvador at the Max and Stacy, where people could actually ask all the questions about Bitcoin hardware or how to store it. And, we just enable people to ask the questions, and they will be surrounded by people that have the answers. And a lot of the times you'll find that, especially on the golf rounds, that somebody wants to play with somebody that might know a little bit less about Bitcoin. And then during those 4 hours, the friends will actually kind of help another friend orange pill. And so, yeah, so that's one point.
Yeah, I mean, again, it's more about the soft sell that the meme that you just basically did. What? There's only 21 million? That's amazing. That's the push the orange pill down someone's throat. That's not what we're trying to create here. Where it's like, hey, when you're around somebody new, you find yourself talking about all sorts of different types of things. And hopefully it doesn't start with politics and religion, but sometimes it does. Or you talk about health, or you talk about finance, you talk about your kids, or, what kind of work you're doing or whatever. So we just basically create a nice networking approach to the whole orange pilling opportunity that's in a much more organic sort of way. So people don't feel pressure that they have to learn. They're at a Bitcoin event. They've heard of Bitcoin. There's no getting around that. That's step one. Step two is them asking questions, not us telling them what questions they should be asking. Or, as they say, you got to meet somebody where they are on their Bitcoin journey, which, to be honest, is one of the hardest things in the world to do, because most people don't know much about each other. So how are you going to know where to start that conversation? So we just give them a place where they can go and do that or not do that. Maybe they just like to come out and beat a bunch of Bitcoiners and go home and brag to their friends about how the Bitcoin community is not very good at golf or whatever sport that they excel at. That's okay too, because we're really about just giving them touch points. It takes a Bitcoiner at least 3 times of hearing about Bitcoin before they start going down the rabbit hole. And the more times that we can get those touch points started and the earlier, then the faster that they're going to be, not necessarily on a Bitcoin journey, but more of a spiritual, financial, lifelong journey that hopefully will help them avoid some pitfalls that we believe are coming in the future.
Yeah. And Bitcoin education can definitely be intimidating to people first getting in the space. So it makes me wonder, how do you go about soft selling or slowly ingratiating people into the Bitcoin ecosystem through a golf tournament, for instance? Do you put good facts to know about Bitcoin in a cart. You have like one non-Bitcoiner and then a Bitcoiner, and it's like, did you know Bitcoin only has 21 million that'll be made? And then they inevitably ask the Bitcoiner, and then they'll start these kind of organic conversations. Do you have like a methodology behind you guys go about educating people in this new and fun way, or what's your approach to that?
It really goes back to what you hear, and I know Michael Saylor said it and several other people have said it, and I don't remember who the original quote's from, but you can't tell people what to think, but you can tell them what to think about. And that's really all that we do. We just give them a place where they can foster conversation.
Well, we also have something that is particular, especially in the golf tournaments, and that is we have special holes. So you will come upon a hole that you're playing, and there's a special rule on how to play that. And it's ultimately a mini education of how Bitcoin works. And people will ask questions based on those rules if they don't understand Bitcoin, or a lot of whys, to their playing partners. So we do give inspiration as to start the conversation. And then, for the Bitcoin Fit Games coming up in Isla Mujeres, October 2nd through the 4th, we will have a lot of Bitcoin mini quizzes that can earn your team points. So obviously, if you know Bitcoin inside and out, you will do a little bit better there. You don't have to do as good maybe in the, rope pulls and other things. And so it kind of is, we just do conversation starters. We're not here to intimidate anybody, but we have found people coming out and really thanking us to create this environment that they could be free in, and that they could ask all the questions. And also a lot of families, specifically for the Max and Stacy Invitational in Isla Mujeres, that are just thankful that there's an event that is actually fun for the whole family. And so, you don't, we do the Bitcoin conferences, but there's only so long you can keep a little kid inside and, make them happy. So.
That's amazing. Well, Chris, Frida, I got to tell you, this I think is such a great idea, and I'm expecting an invite to one of those next golf outings. I've had a hole-in-one, no big deal, so I can play a little bit. I was lucky.
Well, come on down to El Salvador.
Samara Alpha every year gives away 1 Bitcoin for a hole-in-one on hole 16. So if you come to Vegas next year and get a hole-in-one on hole 16, Samara will give you a Bitcoin.
Yeah, or the Max and Stacy Invitational, also hole 16.
Yeah.
Ooh, I love it. I'll have to see if Roxom's got the budget to send me down there, but I appreciate the advance invite. And I'm going to try to take you up on it. Before I let you two go today, Chris and Frida, one more time, if people in our audience wanted to learn more about the Bitcoin Sports Network and all the incredible events that you have up and coming, and they maybe want to sign up themselves, give them the best place to go.
That is bitcoinsports.network. And then on X, we are at BSN_events. And the most recent event that's going to be coming up is the Bitcoin Fit Games, and that's bitcoinfitgames.com if you want to sign up and help Isa orange pill the island.
Amazing, amazing. Well, thank you two so much for your time. It was so great meeting both of you and getting to learn more about what you're building over there. It sounds incredible, and I hope to be a part of it sooner rather than later. And I hope you two have an amazing rest of your week. Thanks for joining us today on the Blockchain Report.
Thank you so much.
Thanks. Bye.
Thank you, guys. Cheers. All right, we're taking a quick break. When we're back, our next special guest of the day. This will be guest number 1, 2, 3, technically 5, so that's very exciting. Stay tuned for that. Coming back on the Blockchain Report with more right after this break.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
All right, welcome back to the Blockchain Report, and we got a special treat with our second deep dive of the day. And our next guest has been described as the gold standard when it comes to Bitcoin wealth services, except he'd probably tell you gold is the wrong standard altogether. He's helped high net worth investors move billions into Bitcoin, built the premier private wealth platform at Swan, and now he's steering investor relations at Nakamoto, a company with ambitions to become the Bitcoin treasury powerhouse on Wall Street. He's been quoted in Bloomberg, the Wall Street Journal, and CNBC, but today he's making his real career highlight appearing here with us on the Blockchain Report. Please give a big welcome to Stephen Lubka, everybody. Welcome to the show, Stephen. It's great to have you. Me and my audience are super pumped. How are you this morning?
I'm good. It's a pleasure to be here. Glad to finally come on. I've seen a lot of what you guys have done and talked with some of the team. Just excited to be here and chat today.
Yeah, and so are we. We've got a lot to go over this morning. First, I would love to just talk about your background. I mean, you've built a really interesting career at the intersection of Bitcoin, macroeconomics, and wealth management. What was the path that led you from traditional finance to going all in on Bitcoin? What was that like?
Yeah, so I really built my career in Bitcoin. So I've been in the industry for extremely long time, or well, no, not as, I mean, eight years or so, not as long as some people, but my career has mostly taken place within Bitcoin rather than traditional finance. But my work has always existed at the intersection of those two things. So, you're right in terms of that. And so I led private wealth for Swan, and the key insight there for what we built is that most of the capital in America, most of the money is held by people that they're used to the financial advisor model. They're used to the private bank model. They are not used to setting up an exchange account and doing their own two-factor authentication and figuring out all of this stuff on their own. So we built a kind of a concierge wealth platform that was more aligned with what high net worth investors in the US I think are used to, which is like you pick up the phone, you call somebody, you work with them for your asset management. And so I did that for 4.5, 5 years. It was an amazing experience. Like you said in the intro, we allocated some 4.5 billion into Bitcoin through that service. And more recently, I joined Nakamoto to lead investor relations and work in the treasury sphere, which has been an amazing experience.
Yeah, I mean, you're really at the epicenter of what's been probably the biggest narrative during this most recent Bitcoin cycle. And that, of course, is the whole Bitcoin treasury company play that we've been seeing. Now, for those who don't live on Bitcoin Twitter like the rest of us, what does that actually mean in practice? Could you break that down for us?
Yeah, so the treasury company idea emerged, obviously MicroStrategy was the first one, and there was kind of a long period of kind of proving out that thesis. But I would say that the underpinning insight to treasury companies is that a public company has access to financial offerings and vehicles that individual investors cannot access. They can issue convertible debt, they can sell equity, they can get long-term debt that doesn't have a kind of a margin call clause like so much lending does in the Bitcoin space. And so they have more favorable and more advantageous financial vehicles that they can use to acquire Bitcoin. And so the basic insight is that a publicly traded acquisition vehicle has a lower cost of capital and can do things that a non-publicly traded vehicle cannot. And that's the treasury company model, effectively, that there is value to being publicly listed. And then Nakamoto takes that a step further in the sense that we're saying, also, you need to go directly into international markets. You need to, there's all of these distinct capital markets around the world. Most of them don't have a treasury company. Most of them would benefit from having one.
Got it. And Nakamoto, you guys just had some pretty big news that's come out recently as he just pulled off a major merger with KindlyMD and secured over $700 million in financing, one of the largest pipe deals ever for a crypto company. Why do you think capital markets are suddenly warming up to this Bitcoin treasury play?
Yeah, so I mean, I think it's twofold, or there's a few elements here. One is obviously the success of MicroStrategy and just the financial opportunity, I think, for a lot of, these firms in traditional finance, right? Like they see the growth and they want to participate. That's just an honest answer. But the other is, I think we're at this moment where Bitcoin is transitioning into an institutional asset class, right? You had the enormous success of the ETFs, and so some 90 billion plus. And you've had this kind of gradual transition, I think mainly curated by the ETFs and the Trump administration, the regulatory environment changing. Not to say there obviously wasn't a large buildup, right? Like of years of work being put into infrastructure. But I think those two elements, the regulatory clarity and the success of the ETFs, has tipped Bitcoin over where capital markets are now asking the question, like, how much exposure do we want to this asset? Like, what does our Bitcoin position look like? What do we need to do to be able to buy it? And one of the things you notice in a lot of sovereign wealth funds, very regulated hedge funds, and other institutional investors is they own MicroStrategy or they own MetaPlanet. And so you have to ask the question, why didn't they buy the ETF? Why are they deploying? Why is the largest sovereign wealth fund in the world, the Norwegian fund, buying so much MicroStrategy? Why not the ETF? And the answer is that having a corporate wrapper, having a corporate equity is a better fit for most people's investment mandate. It's a better fit for a lot of capital in the world. So you unlock new capital when you basically package Bitcoin in the form of a corporate equity. And then that doesn't even include that. And then you deliver growth on top of it. Like, that concept is more native to, I think, a lot of people in finance. And I've seen this in my conversations with analysts at the investment banks in the US. So as part of my job for Nakamoto, I'm talking with these investment banks very frequently. And treasury companies, I think, make more sense to them than Bitcoin has. Bitcoin is complicated because there's no cash flows, you can't model it, it doesn't have a traditional growth rate. And so I think it's confused them for a while because you basically be like, hey, I mean, we think this thing is going to go up, but there's absolutely no way to model it or value it. Treasury companies kind of come back more into that traditional structure where there's a lot that I think analysts can do with these. And so I think they get it more, and it's a better fit for a lot of entities in capital markets.
Yeah, that makes a lot of sense. You get a lot of the benefits of Bitcoin, but with a traditional wrapper, which seemingly makes it a lot easier for people to dip their toe into the orange water. So I definitely get that. And when I was doing my due diligences before we knew we had you on the show, I saw that you've said before that Bitcoin treasury companies could become a primary vehicle for global capital to gain exposure to Bitcoin, kind of like we just spoke of. So that begs the question, how big do you think this sector could realistically get?
Yeah, so I think if the Bitcoin treasury thesis is successful, that there is market demand for corporate structures that not only accumulate Bitcoin on their balance sheet, but I think eventually transition to operating businesses and Bitcoin financial institutions, right? So in my view, what the treasury company is, it is the capitalization phase of future Bitcoin financial services, Bitcoin investment banks, and so on. And so I think if the thesis is correct and Bitcoin becomes a multi-trillion dollar, I mean, it already is a multi-trillion dollar asset, but goes up another 10x or 20x, the market will demand Bitcoin native financial institutions. It will demand financial institutions that understand the asset, that touch the asset, that have expertise in the asset, because that asset needs to be integrated into both securities markets, into banking infrastructure, into economic infrastructure. And the simple truth is most of the banks don't have the DNA and don't plan to, in any sort of short time frame, touch the asset. And so I think like many other trends in history, what ends up happening is that there are new players that come on the stage that build around the new phenomena, and those are the providers that succeed there. It's kind of like the mutual funds didn't launch the ETFs, right? Like the ETF providers were new companies that came in and did the ETF. It's rarely the incumbent that innovates, that captures the new terrain. And so I think we're seeing this capitalization phase for Bitcoin treasury companies in the sense that like you'll get some number of them that transition into these financial institutions. And then, you're looking at, probably market caps in this end stage in the hundreds of billions or, maybe some that even reach the trillions of dollars. I think these become major financial institutions if the Bitcoin thesis plays out. Obviously, I'm a bull on that. And I think Bitcoin is going to become a key capital asset. But if that happens, the companies that have the large treasury and also provide services there are home runs.
When you talk about the Bitcoin thesis playing out, do you see that as Bitcoin being mainly used as a store of value, akin to gold, as digital gold, or do you see it also becoming more of a medium of exchange, kind of like Jack Dorsey has banged the drum about a couple of times, saying Bitcoin will only kind of fulfill its destiny once we're starting to use it, for peer-to-peer payments more frequently? Do you think it needs to be both of those, or can it become what you think it will become and, fulfill that thesis as solely a, store of value?
Bitcoin can absolutely be extremely successful only as a store of value. I think that much is clear. Mm-hmm. There is a key role it could play internationally and in the financial system. Look at gold. Gold has a large role. It's the biggest asset in the world. All it is a store of value. So that's certainly a scenario where Bitcoin could end up and would be successful. It is not, I think, fair to say that if it doesn't capture that medium of exchange role, that it fails. Now, that doesn't mean it can't. It doesn't mean it can't be a medium of exchange. That doesn't mean it won't be a medium of exchange. It also doesn't mean that it won't be more valuable if it's also a medium of exchange. So I'm very bullish on both Bitcoin's potential for that and its capacity to benefit, that it would benefit much more from having that function. But I do think the store of value adoption comes first. I think that's earlier, that's more foundational, and I think we have a longer way to go on the medium of exchange component.
Yeah, no, that feels right. I mean, I think right now we're at that point where the tracks to the Bitcoin train are being laid before our very eyes, and before we see it evolve into that next thing, we need those tracks to be in place first. Now, I want to get back to Nakamoto here for a second. In your new role, you oversee investor relations, which, correct me if I'm wrong, basically means you're the translator between hardcore Bitcoin conviction and Wall Street skepticism. What are you finding is the toughest objection you hear from institutions right now that are still apprehensive to dip their toe into the Bitcoin pool, and how do you go about answering it?
Yeah, so I think that's definitely a key kind of part of the job. Surprisingly, I have not met that much opposition at this stage. Most people I've spoken with, and I've spoken with quite a number of institutions, they're very excited to get their arms around this now. They're interested. Now, that doesn't mean they're not building conviction and understanding. That is certainly happening, but I wouldn't characterize it as an objection per se. I think it's more of an education process. I think it's more of their kind of building their models and how do they relate to this thing and what role do they see it play. And so, I think in the treasury companies, a lot of what you see is just thinking around MNAV, how to value these things, how to write about these things, and also that long-term goal of where does this end up? Which, like I said, my view is these become operating businesses and financial institutions. But so I think it's like they're making up their minds and composing their thought process on where that ends up. And I think that's the stage that they're at. I think so much of the skepticism was effectively blown out by the ETFs. And I actually, so I had talked to some people that had some conversations. I guess I shouldn't say who this was, but executives at a massive financial firm. And they basically said that they were skeptical of the ETFs. They were skeptical of Bitcoin. But then once they saw how Bitcoin performed during the tariff volatility, right? They were sold. They were sold. Like Bitcoin was a better asset to own. And I think the volatility was holding them back a lot. And I think the ETF and the performance post the ETF era has convinced so many people. I think they were struggling before that, but you don't watch BlackRock launch the most successful ETF of all time and then the volatility compress on this asset to a very reasonable amount and not, I think, get a little interested.
Yeah, absolutely. It certainly seems like all the institutional money and these ETFs that we're seeing have really muted the volatility of Bitcoin's waters, and it's just been kind of more of a slow and steady rise rather than those parabolic shifts we had seen previously. And with that in mind, I want to talk about Nakamoto's competition, right? We talked about MicroStrategy earlier. We talked about Metaplanet. They're both stacking hard. What makes Nakamoto's treasury approach different from simply buying Bitcoin and then tweeting laser eyes on Twitter? How do you guys go about it?
Yeah, so I think there's a few kind of key differences to what we're doing. One is the team that's behind Nakamoto is a lot of the key team that oversaw UTXO, which was the hedge fund under Bitcoin Inc. that actually was the best performing hedge fund in the world over a 5 or 6 year time frame. It really did amazingly. And at the last time I checked those numbers. And that was done through investing in first movers in international markets. So the UTXO team recognized the opportunity for treasury companies early. Metaplanet was the first investment that they did. So this was the team behind kind of part of the initial Metaplanet idea, as well as Smarter Web, Blockchain Group, and many others that did extremely well. And so the thesis there is that, again, there's a lot of capital trapped in international markets that can't easily buy Bitcoin or American assets. And so if you can launch a quality treasury company that's a first mover that provides an on-ramp for that capital, that's a very compelling offering. It's a very compelling idea. And Nakamoto, that's part of our key strategy, is we plan to invest a portion of our balance sheet in kind of international treasury companies and playing a key role. And that can take a lot of different forms, but for now, let's just say that we plan to deploy our balance sheet in that thesis. So that's one thing we're doing that's different. It's very different. We plan to be more engaged and more active. And we also are looking at, we have a core thesis on operating businesses, on synergizing with the Bitcoin treasury. So what businesses could you own or operate or acquire that actually create cash flow with the Bitcoin treasury or synergize with it? And that's a question we're very actively asking. So I think we are a team of operators from the Bitcoin industry. We're people that have been in the industry, that have operated Bitcoin businesses for quite a while. And we view Nakamoto kind of as both a direct kind of treasury company and treasury play and an expression of that thesis, but also a way of kind of pulling that all together and kind of synergizing it with where this industry is going to end up.
Interesting. And it sounds like you're still kind of figuring out how to decide which sectors or companies make sense to bring under that umbrella. Like, you don't have a formula for that yet. I mean, what you guys are doing is still very new. I don't want to say completely unprecedented, but it is new. So do you have an idea of what qualifies a company to kind of be brought in by you guys?
Yeah, so, we're now in the domain of public company regulation. So it's not something we've disclosed to the market, and I can't talk about our criteria there yet.
Sure.
But it is something that obviously we would like to present to the market of how we're thinking about that and what our long-term capital strategy is and how we would evaluate those criteria. It's something we're very actively engaged in and that we look forward to sharing. So definitely a good question and definitely something that we're putting thought into. And I think that's, again, it echoes this core point that, like, we want to build Nakamoto as an institution and a business that sits in the Bitcoin industry, that sits in the rise of this asset class and participates in many ways.
Mm-hmm. Yeah, I hear that. And, we've seen public market investors get really excited when traditional companies buy even a small amount of Bitcoin to put on their balance books. Do you think markets are ready to value a company primarily on its Bitcoin strategy, or are we just not there yet?
Well, I think they have with these companies in many regards. So I think all of the existing treasury companies are being valued almost entirely off their Bitcoin treasury and operations. But now, how does the market feel about doing that? I think many people are deeply conflicted. And you get to this very interesting thing where in public markets, the focus is on your income statement, on your cash flow, and all valuation calculation is effectively downstream of the growth of your revenue and the growth of your income statement. Current valuation models do not effectively, they really don't value balance sheet. They don't put a lot of value on how robust is the balance sheet of this company. That balance sheet is certainly not getting a multiple or factoring in key ways. It might be kind of included at par. And so I think there's kind of this interesting question that treasury companies raise is that the right approach? Is that how we should value the balance sheet? What about companies that have a better balance sheet, that have proven that they have a better balance sheet over years, that are putting in effort, operations, and strategy to stewarding, growing, and capitalizing on the highest quality balance sheet possible, right? Like, if you are delivering enterprise value by being a much more sophisticated balance sheet manager than another company that's just sticking $1 trillion in T-bills, is that worth something besides the net present value? You could argue that you are providing value growth there. I mean, you are growing the value of the business. Somebody who invests their balance sheet that grows 20% a year is worth more than someone who grows their balance sheet 1% a year. I think disagreeing with that statement means you're putting orthodoxy ahead of substance, meaning like this is just something. And a lot of people on Wall Street would disagree with that statement because it doesn't fit the contemporary valuation models. But I think it's flawed because, value is value. And I don't really care where a business is making, growing their value from, as long as they're doing it consistently and well. Like at the end of the day, if you want to give me a stock that goes up 50% a year from balance sheet operations versus from revenue growth, like I don't care. As long as you can do that consistently. The pushback would be like, well, maybe it's more fragile, or like markets go up and down, balance sheet operations are different, but economies go up and down too. And revenues contract all the time and like products contract. So I don't think the market's there on this topic yet, but I think it is an interesting topic that it's a question that's being posed by these businesses is like, how do we value a balance sheet versus an income statement? And I honestly think like at this moment in capital markets, with the debt situation where it is, with fiscal spending where it is, and also with like potential AI disruption in a sense, what I mean there, I don't mean to use that as a buzzword, but I mean to say, if we do actually get a scenario where there's a high level of disruption of many businesses because of AI, we could argue if that's going to happen or not. I think there's something kind of unique in Bitcoin as an asset in that scenario, and kind of having this store of value asset on your balance sheet that would benefit from net total growth without being vulnerable to sector by sector disruption. So that was a lot of things, but I mean, those are some of my thoughts there.
No, I understand. I appreciate you detailing that take for you. But you mentioned the word value a couple of times, which I'm glad you did, because critics will often say that Bitcoin companies are too dependent on price action. So my question would be, how does Nakamoto plan to prove its value in sideways or bearish markets?
Yeah. So I think for a treasury company, your value is the value you add via your operations and strategy, right? So it comes down to what are the actions you're taking that are specifically accretive or that specifically deliver value for shareholders, right? And if you have cash flow that you can deploy in a bear market, if you have better financing terms, if you have capital partners that are willing to lend you money in a bear market, if you have an investment strategy for the balance sheet that outperforms, kind of the market or Bitcoin or what have you. These are all ways that like through your operations and through what the team is actually doing, you deliver more value. And I think like that's how these companies should be looked at. It is not, there is more to this than just say you're putting Bitcoin on your balance sheet and start selling equity. And that's certainly going to be where the market ends up, is that it's not enough to just do that. And you can see it like diverging performances, diverging MNAVs across constellations of treasury companies. Like it does matter what you're doing. And that is where the value is derived from. It's derived from strategy, operations, and execution. I like to think of it as like treasury companies are similar to the miners in many ways. Miners identify pockets of cheap energy where they can arbitrage the value, the price of the energy to effectively buy Bitcoin for less, right? Like they're buying it through the mining process, obviously, but they're looking for cheap energy and they're turning cheap energy into Bitcoin. Treasury companies are doing a similar thing where they're looking for cheap capital and turning capital into Bitcoin. And so it's a similar model. And just like all miners don't have the same energy price and don't operate the same, all treasury companies don't have the same strategy or the same cost of capital.
Mm-hmm. That was very well put. Thank you for breaking that down. I know your time is limited here, so one more question. We'll get you out of here. So, Stephen, if you and I were talking again in 5 years' time, what do you hope people will say about Nakamoto? That it built the first Bitcoin native conglomerate, that it brought trillions into the ecosystem, or simply that it orange-pilled Wall Street suits one portfolio at a time? Or maybe something else? What are your thoughts?
All three sounds great. Be very happy with all three. We want to build a long-term Bitcoin financial institution. I think this is the vision of the team, and I think it's a good one. That we do not currently have many Bitcoin financial institutions, and they're certainly not integrated at scale into the hundreds of trillions of dollars of the financial and asset landscape, right? This is a big world with a lot of value in it. And Bitcoin is a very small percentage of that. And Bitcoin financial institutions, even less so. So, we want to build Nakamoto as a business that engages with an evolving landscape, a rapidly evolving landscape for Bitcoin, to build a Bitcoin financial institution that lasts. And so obviously that looks like responding to and capitalizing on market conditions as they arise, which will change over time. And there will be different opportunities. And it's one reason we're definitely, we value being active and being engaged here, and also just leveraging decades of experience across the team collectively in the Bitcoin industry. And, I think a key position in those networks and, interface with both traditional finance, the political landscape, and so on.
Yeah, and it seems like you guys have very smartly positioned yourself in a place to do so, and we're super excited to see what you and the team at Nakamoto will be drumming up next. I certainly, before we go, I know there's probably a lot of people in our audience that are very interested in learning more about what you're doing over at Nakamoto and where they can find more takes from yourself. So is there a good Twitter handle they can follow you on? Where's the best place for them to go and learn more about you and Nakamoto?
Yeah, absolutely. I'm very active on Twitter, very responsive to comments. DMs are open. So just my name, Steven Lupka on Twitter. Check it out if you want to reach me. Also the Nakamoto handle, just at Nakamoto. Follow us on there for any key corporate updates and what have you. So we push all kind of major updates through there. And yeah, if you want to get in touch directly, I'm the right guy. I lead investor relations, and just reach out on Twitter. That's easy.
Amazing. And last question I almost forgot to ask you, Steven. By the end of this year, 2025, we're keeping track of all of our guests, what they think their price prediction will be for Bitcoin by the end of this year. We're going to give a free Roxom Patagonia vest to the winner. Okay. What is your number? We have 200,001 and 175 are the most recent guests. So what do you think?
Yeah, so I'm going to give kind of a twofold answer. I think it's probably between 150 and 170, but I think it goes higher in 2026. I do not think the top is in this year. So I think we end the year in the mid to upper 100K zone. If I had to pick something, let's say 160. But that's not the top, and we've set new highs in 2026.
Love to hear it. 160 is not the top, but we got more good stuff on the way. Steven, thank you so much for your time today. It was an absolute blast having you. We hope to have you back again in the near future. And yeah, it was great. I hope you have a great rest of your week, and thanks for joining us. It's been fun.
Pleasure to be here, man. Great to meet you. Great to come on. See you guys.
Cheers. All right. See you. Enjoy the rest of your week. All right, we're going to break. We'll be right back to wrap up today's show in just a sec, so stay tuned. More Blockchain Report coming to you after this.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at Roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, and we're back. Let's wrap up today's bull one. We got a couple more stories to get through. Next up, Metaplanet, Japan's answer to what if a corporation went full Michael Saylor, but with sushi, has approved a plan to raise $880 million through an overseas share issuance. And here's the kicker, $835 million of that pile is earmarked to buy Bitcoin. Yeah, they are literally printing more shares so they can stack Satoshis. The company plans to issue up to 555 million new shares, which would balloon its outstanding stock from 722 million to about 1.27 billion. The issue price will be determined in September, with payments settling shortly thereafter. So congrats to existing shareholders. Your slice of pie is about to shrink, but don't worry. Management promises it's for your own good because the pie is getting filled with Bitcoin. The Metaplanet already has nearly 19,000 Bitcoin, worth around $2.1 billion. And they say this move is all about hedging Japan's weak yen, fighting inflation, and enhancing corporate value. By 2027, they want to hold more than 210,000 BTC, and that's over 1% of the entire supply. So they'll own 1% of Bitcoin's supply and the bragging rights to being Asia's most committed corporate maxi. And GameStop may not officially sell Bitcoin at the register, but one shopper in Arizona basically hit the crypto lottery anyway. All it took was a $13 pack of trading cards. Inside that pack of Cardsmith's Currency series, the collector pulled the golden ticket, a redemption card for one full Bitcoin. That's nearly $112K at today's Bitcoin's price. Not bad for something you usually shove in a shoebox and then forget about forever. The anonymous collector admitted that they didn't think it was real. Well, surprise, surprise, it was. Cardsmith's Currency cards are basically trading cards for crypto gamblers. They include redemption codes for Bitcoin, Ethereum, Litecoin, and Dogecoin. The top prize, a full Bitcoin or a full Ether. Now, odds of pulling one are 1 in 192 per pack. Now, this isn't the first time someone's done it either. It's at least the third full Bitcoin redemption in the last year. Other winners hit the jackpot with $33 packs and even $50 packs. But this latest winner hits a little different because they only kept half of it. The lucky collector promised to donate half of any crypto winnings to charity. Aww. Now the winner found the golden ticket on Cardsmith Series 4 currency cards, but those are now sold out online. But their latest Space Series still has unredeemed Bitcoin cards hidden inside. Those packs go for as little as $13.75 a pop on their online store. Of course, the odds are still 1 in 192 packs, so you're far more likely to end up with a shiny piece of cardboard than 6 figures in Bitcoin. But hey, someone's got to win. All right, it's time for Bullish, Bearish, or BS. Let's run the stinger and wrap today's show. All right, time for Bullish, Bearish, or BS. Let's recap today's top stories and see how things are looking for Bitcoin. First up, the Commerce Department announced it will start putting GDP data on chain, calling Trump the crypto president while promising broader blockchain-based transparency. I'm bullish on this. I mean, come on. Blockchain adoption, even if it's government theater, still boosts Bitcoin's future, so I'm feeling bullish. Next up, we have analysts are saying that Bitcoin could replace gold by 2030 if Bitcoin takes gold's $20 to $22 trillion market cap. It'd be worth over $1 million per coin. Even partial adoption puts Bitcoin well into beyond where we are in the 6 figures currently. My verdict on this, obviously, it's bullish, right? I mean, yeah, that guy said it all right there. I mean, the math shows 6 to 7 figure Bitcoin is very much in play, and I love number go up, so I'm bullish. Last but not least, we have Japan's Metaplanet raised $880 million and earmarked $835 million of it for more Bitcoin. Ooh, I love to hear it, and I am bullish about that too, baby. I mean, Metaplanet's dilution is Bitcoin's accumulation, baby, and it feels so good. So today's final score, 3 bullish, 0 bearish, 0 BS, which means today is wall-to-wall bullish, baby. And that is a wrap for today's show. As always, thanks for tuning in for the Blockchain Report. Don't forget to like, follow, and subscribe to RoxomTV and yours truly, and Hank at RoxomTV on all platforms that people care about. And I'll see you all tomorrow for more Bitcoin Bedlam. Until then, hodl on, gang.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here.